I think the biggest factors that in any of these spaces is almost about risk. So anytime technology pushes the boundary, there's that hesitancy and the risk awareness of people to, especially within the asset management side, which is a you know from an industry standpoint, there's definitely much more hesitancy towards like adapting some of the new ones. With that said, like there are some players who are much more aggressive in terms of taking that approach, who get the benefit of it.
Hello, and welcome to another episode of The Long Game. My guest today is Ajay Srivatsavai, and he is the C-suite executive for private equity firms and other financial allocators and investors. In this, he goes through his experience of 20 years working with private wealth management, private equity, as well as capital allocators. And we go and do a deep dive into private equity, what they should be doing, why the sector is growing, how they should be using technology, how they should be using AI, what are the particular applications that they should do, what a PE firm should be thinking about, but they're not thinking about right now, and so much more. This is a phenomenal conversation if you do anything relating to wealth or technology in the financial sector. And I highly recommend you connect with Ajay and give this episode a listen. Hope you enjoy and catch you in the next one. Ajay, let's start with just kind of the fundamentals of asset management. It's a very broad area. We're going to dive into kind of the implications of technology and AI with regards to asset management. But how do you envision and see kind of the pillars of asset management itself?
Yeah, I mean, I think in my view, from a technology viewpoint, asset management in general as an industry is quite broad. I feel the key elements or industries that drive asset management, number one, I think in general, investment management is a big component. It's a combination of hedge funds, family offices, allocators, and asset managers all fall into that bucket for me. The private markets, which is probably a combination of private equity, private credit,
venture, I guess, right?
infrastructure, real estate,
private.
venture. Yeah, yes, a part of the private markets, venture, yes, and infrastructure is probably another component, in real estate, right? Similarly, I think wealth management is another area of where people are very kind of interested from a technology standpoint to see how technology can actually enable wealth management in general. So if I see how crowded the space is from a fintech standpoint to provide different components of services or multiple suite of services, I think technology and all aspects of now we're going to probably talk more about AI, but I think all of them are very ingrained within all aspects.
Yeah,
of these
I think one of the things that's interesting about the finance world in general, and within those three buckets as well that you've kind of listed of wealth management, the private world, and then asset allocators, is technology is adopted to every industry, but there's certain industries that are going to lean into it faster. And I think with anything relating to funds, money management, investing, you can see a direct return on, if I build good technology, I get more money, I get better returns, I get better alpha. And so it's almost always one of the first places to enter into it. But also, I know you and I've kind of talked offline about last year, there was kind of this hesitancy on adoption of Gen AI and LLMs because there's this question of governance and hallucinations. And that's kind of shifted. The narrative has shifted a little bit from what I've seen over the past 6 to people leaning more and more into it. Talk about like the adoption of technology broadly, and then also with Gen AI into either all three of these buckets, or if you want to lean into one particular.
Yeah, no, that's a great question. Yeah, I mean, I think I think the biggest factors that in any of these spaces is almost about risk. So anytime technology pushes the boundary, there's that hesitancy and the risk awareness of people to, especially within the asset management side, which is a from an industry standpoint, there's definitely much more hesitancy towards like adapting some of the new ones. With that said, like there are some players who are much more aggressive in terms of taking that approach, who get the benefit of it. I've seen, for example, if I can compare this to the cloud adoption, right? There's a lot of, asset management
And by cloud
clients
adoption,
that
you mean like the
I've been part of.
2000s and 2010s of like everyone migrating to cloud?
Yeah, yeah. I mean, I would say even more recent, like in the early 2010s, right, to 2015. There are a lot of people that were very hesitant towards moving their information and data into cloud, and that adoption took. I mean, that journey of people crossing and kind of being comfortable about the fact that you can take advantage of being in the cloud. At the same time, I think you can also take advantage of additional things that the cloud offers. I think that journey itself, we're probably in the similar bucket with Gen AI. So there's some players now that are much more aggressive in terms of how to take advantage of it. But at the same point, some people are like, hey, I want to make sure that everybody figures out the governance, the compliance, where data is stored, what are the LLMs accessing from my data standpoint. So in essence, the quick stat that I've seen is just in the portfolio valuation within private equities, about 4 to 5% of the companies at the moment use AI towards
And AI
portfolio valuation.
specifically meaning
That's
like
projected.
LLM Gen AI or just AI in general, including traditional machine learning models?
No, I think this is Gen AI. I think more of extraction using some of the models to help them assist towards portfolio valuation. That that number is projected now to be close to
Wow.
25% over the next few years. So if we look at that within private equity, which I feel is probably less tech savvy from the all the other industries that we've just looked at. It's almost like probably the slowest adapter compared to the other areas of asset management. The information with which like how or the pace with which AI is in general trying to penetrate some of these markets, especially generative AI use cases, is really much more faster than I would say
What?
any
Why
other
is that, by the
components.
way? Like,
And
why?
I
Why
think
is private equity lagging behind? Sorry to derail you, but like, private equity is a great asset class. It generates great returns. It's kind of continues to rise and have more and more AUM going towards it. Why do you think there's that gap between technology adoption within PE?
yeah, I think it's the best way to put it is probably more the accessibility of private equity to retail investors has
Mm,
been much less in the past. Traditionally, it's always very high net worth individuals allocating money towards private equity. So that's probably I'm not saying that as the reason for like slower technology adoption, but the ecosystem with which information is available within the private equity is not as standardized as a stock data that
right.
you can publicly get or market data that you can publicly receive. All of the other information that probably a public market probably offers is a lot more standardized because it's required, it's regulated, it's people do need to do their filings. All of that information basically is accessible for analysis and analytics that companies can produce, kind of hence leading towards more and more technology adoption in those spaces. On the private side, I think the information is a lot more unstructured. So traditionally, if you look at structured data, was much more easier to adapt for people. Unstructured data is always the hardest. So now with Gen AI, that barrier is actually in a much better situation.
Before you go on to the second point, just the nature of, if you're a hedge fund, you're trading publicly traded bonds and stocks, et cetera. And so all that data is structured in a particular way to meet regulatory reporting requirements of, you report your K1, your quarterly earnings, you kind of have you have your, technical analysis of your earnings per share, and kind of all the stuff is standardized from one company to the next. Whereas private equity, these private companies are just probably a complete, shit show, for lack of a better word, in terms of how they're reporting, how they're tracking, and it's just different from one to the next because they don't have to meet that same regulatory controls. That's interesting because it is a much more unstructured data problem versus traditional markets.
Yes, and a lot of this is actually research that's sitting in companies' information, GPs and LPs that traditionally have kind of formed. There are a few published research companies now that are providing data, which is great for private companies as well, which is very, very, very helpful. But I think the other second point, which is probably I feel is the bigger component, is the overall size of private markets has also to do with the adoption of technology. In my view, now it's growing at a much faster pace where not only just money from high net worth individuals that are interested in allocating money towards private assets and highly liquid products, the accessibility to retail investors for investing in private markets. There are some ETFs now that people can invest in real estate and a bunch of other products. All of these is leading into just as an example, like in the past year, the growth of private equity industry is at the moment. I mean, I've just looked at the stat. Like in 2024, it's about 13 trillion, and 2025 is expected
Wow.
to be 15 trillion. So if that additional information, or in general the interest for capital coming into this industry, I feel there's going to be opportunities for technology to take to be an enabler towards faster decision making, improving efficiencies.
So there are two buckets that I would, and you've been in the capital market space and in asset management, I guess, for 20 years. You have way more knowledge than I do in the space. But if I were to break it down, my guess would be that technology kind of has two main levers that it could be applied to in PE. One is internally, right? So going into a private equity firm, understanding workflows, processes, building out technology, LLM enabled stuff. And then the second bucket would be an opportunity for a startup, basically, or any builder of technology, but a startup to build a tool that could become sold to PE firms. So maybe break it down for both of those approaches, maybe for PE firms, how they're looking for evaluating new technology to bring in, or also where should they invest. I know that there's a big, I've talked with a lot of people and in PE as well, and also in venture and other sectors. And there's kind of this fear, at least last year, of, well, should we build it in-house because maybe someone's going to build a tool and I should just wait 6 months and then the tool's already going to be built. Whereas if I invested all this capital to do it myself internally, it's wasted capital. But then also that means you're sitting around hoping someone's going to build a tool that's useful for you and it fully meets your needs. So talk about kind of both opportunities. And then also maybe from the build side, once we look at it from the PE's perspective, talk about maybe a founder's perspective of building a new tool to sell to PEs.
Yeah, that's a good way to probably look at. So sometimes I think it's really important to understand, like, when we build something for a particular hedge fund or an asset management, typically it's more for the firm itself to take advantage of whatever that piece of proprietary technology is. In the case, like you brought up the first point, which is more about the private equity in general has this combination of GP, LP, general partners and limited partners, combination of how PE firms can look at both areas where, for example, an application that's built that could be directly applicable for them is one great thing. Second thing is, how is that scalable towards some of the portfolio companies
Yes.
that the firm is invested in? So if you look at that component, like, instead of building it for one hedge fund versus or one fund who's really interested in creating a competitive advantage for them, there's a much scalable opportunity and need here within a GP or a private equity firm to not only kind of create something for themselves, but which component of that could be taken advantage
Kind of
for the
built-in
portfolio
distribution.
companies, right?
All
So
10 to 30 portfolio
yeah,
companies get this software that is a game changer, for lack of a better term.
correct. I think if you take, like, I'll take a very quick example of a generic thing like PDF extraction. I'm sure everybody in this ecosystem is dealing with some form of PDF or unstructured data extraction, or email, consolidation and synthesis is a big component of information coming from outside that they have to synthesize, consolidate, and try to see why it wastes certain time for a lot of people that are going through email inboxes and other things. So I think that's probably a big, I would say, additional factor that really creates an advantage. The second part that I would probably think, I think you asked about,
Mm-hmm.
like, from a building standpoint, the the traditional planning that was required for a design architecture and the typical life cycle in a software development, it was much longer for building a traditional application in my view, even if it's on the cloud or
Everything took longer.
even
Building,
on-prem.
planning,
But
testing, design.
yeah, and I've seen you guys at Transient are a good example for me. Is like, the pace with which you're spinning out some of the newer applications once the initial framework is built is amazing. So if you ask about, like, the switching cost and the barrier has really now minimized from, which is a painful process for any CIO who's making a decision, or a CFO who's making a decision about, hey, how much money should I invest in having this application built? That has now actually become a much easier use case. So if, at a high level. From a reason why I think that's good and bad, I'll tell you, because there's so many companies within the portfolio stack now, in general, that are offering either a small service or a combination of services. So because I think it's much easier to create a new company and focus on a particular problem and be of a competitive advantage. So long story short, I think my point is that if the firm can take advantage, and the fact that it's much easier to now build something from scratch, or even integrate with their existing ecosystem, that component is really of a great advantage. And the fact that you don't need as much capital that you would have in the past, to create a data platform, or even an application that was specifically requiring to improve efficiency, that's a great situation to be in from us who are offering technology service.
So if you are a builder, again, you can kind of go in-house route, you could go employee route, etc. You could also stay external, right, and try to build something for multiple PE firms. And to your point, it's starting to get noisy within the software solution services for PE. Would you advise against building a platform? Or if not against it, how would you think about building and positioning to sell into PEs, given there's going to continue to be a proliferation of more software kind of coming in, trying to compete for private equity businesses, with AI or just traditional software offerings?
Yeah, I mean, I'm probably, I don't think I would answer anything without actually knowing the problem. The consultant in me actually is ringing inside, but I think the key part here is, I mean, I'll give you a case that might be of a good example that fits the need. At one of my current previous firms that I worked with, we had a clear proprietary sauce towards how we handled a component of advisory and wealth management. And we also know this is a very crowded industry from a technology standpoint. We can replicate or try to build on top of the proprietary way of how we manage and look at portfolio analytics and other things in a wealth management space, or really look at the industry itself and who's actually providing this. What is the primary risk that the firm in this case was faced with is like, hey, do we want to still continue expanding towards leaking or showing our secret sauce to this particular software company who could be using this for other companies, right? So what we did is, in that case, we found a fintech which probably managed 85% of the use cases that we require, which are pretty generic in the market. We packaged a particular deal to manufacture the other 15% or build the other 15% by the fintech, and leverage their actual SaaS for the 85%, and then customize the other 15% for us, right? So that's in my view, it's a perfect example of how to approach build versus buy. There's no probably one mechanism. If anything, I probably think there is so many firms that are now offering individual services. As long as any sort of company that's available to buy, however, they're ready to integrate with everybody else that's in the ecosystem, that's an important element. We don't want to be, from a consumption side, if let's say I'm approaching it from a CTO standpoint, I don't want to be ending up with like 5 or 6 different systems or platforms that any of our users have to deal with. I think it's important to have some sort of framework that kind of ties your technology ecosystem that's much easier to manage, not only from a technology and data standpoint, but I think from a user standpoint, they don't have to switch between platforms. I think those kind of things. In essence, if I have to, summarize what I've, probably said is like, I'm leaning more towards the buy, but at the same point, it comes with some of these elements that are really important to retain what the business model is required, plus retaining the integration
And it's not
is
that
really important.
binary. I mean, I think that's something that you highlighted with that example you were talking about is it doesn't have to be we're fully going to build it or we're fully going to buy it. The example you highlighted is okay, well, we're buying off the shelf for
Yeah,
85% of it. 15% of it we're outsourcing to build, but build on top of something that already exists. And I think that is a helpful frame of it doesn't have to be such a one-dimensional decision, and then to think about it from
yeah,
your end user's perspective, which are your employees within a PE firm, or maybe your LPs if it's kind of a portal for them, or something to that effect. Being able to think not just about, well, where are we right now? We're a 500 million or a $2 billion fund, but as you scale and you get bigger and bigger, how does your technology and your technical choices scale? And that's really what a CTO should be thinking about. It's not necessarily just the software you're building. They should oversee that, but that's kind of a smaller problem.
yeah,
It's more about what is the
yeah,
overall system. And so there's kind of this natural instinct to say, oh, well, let me just grab this, grab this off the shelf to start. And then you end up with kind of 15 things that are stitched together with weird workflows where it's like, oh, well, we got to copy and paste data from here to there because, well, that's just how it is. And we need this tool for that one feature still, so we can't get rid of it. And then you're kind of in this weird capped growth area because the technology
yeah.
hasn't scaled up. So I love how you're kind of tying it back
And
into,
then,
yeah, there's the balance between you want to buy because then you don't have to be responsible for it, but you want to make sure that you're doing it intentionally and doing it in a way that orchestrates and brings everything together so that you can keep scaling and technology doesn't become a limiter. It's an accelerant, but at some point it can also become a limiter depending on how it's
yeah,
architected and stitched together.
yeah. I mean, I think the example you gave is a perfect case for what ends up happening after those 15 systems is that you know uh, everybody thinks that you now need a data warehouse or centralized data lake, or and you start investing several components and millions of dollars into some of these bigger platforms, and now you are trying to think of like you're integrating these systems on yourself, and that's the burden that you have to carry. So I think it's really I mean, not every firm is probably has the luxury of thinking from scratch, but I think it's great that um, anywhere if you have a chance to relook at a technology strategy for any firm, I think it's important to understand like which components to retain and which components to really modernize. And through that journey, I think if more and more there's so much in the market right now, and I've looked at there are probably like 110 companies within software fintech companies that are offering some kind of PE service in the life cycle, from deal sourcing, deal extraction to portfolio monitoring, portfolio management. So, if I have to really come up with a decision of like what's the best tool for this particular firm, it's going to take a little bit of understanding of what's the right stack of tools that you would like to
We've
integrate
talked
with.
about tooling, technical strategy, AI from a technologist perspective within the PE world. What should a PE firm
Yeah.
themselves be doing? Maybe they don't have that technical capability currently. Maybe they have it, but they're not, the technology leadership isn't leading enough. What should a PE firm be thinking about today as it relates to technology, as it relates to AI, and as it relates to this growing industry and market if they're not necessarily a CTO themselves?
If I have to kind of bucket them in a different sense, right? From a technology standpoint, if I look at the front, middle, back office in a traditional either PE firm or even a GP firm, I think a lot of technology always starts in the back office. That's towards accounting, portfolio monitoring, some of the statement generations and stuff like that, processing information from capital statements, all that. However, I think what my view is in advice for any technologist, from an application developer to a CTO, anybody that's really working with anybody within the PE industry, is to focus more on the front office. There is a lot of opportunity for PE firms to take advantage of technology within that space, and there's several use cases that I think that are practical towards gaining advantage, like we discussed earlier. Now that the cost to build a new case or automate a new case is much faster, and much slower. I think it's great, to showcase some of those quick wins any sort of firms can take advantage of. So that's my probably, number one thing is focus more on the front office. If I look at generally Gen AI adoption, it's much easier if I, kind of bucket them into areas where people are using it for operational automation. That's one component, which is great. But because those are easier for people to make a business case. Hey, you know what? I'm spending X hours, but if I use this particular automation, I can remove that, right? Those are traditionally the way of how a CTO was approaching towards creating a budget or a business case. However, what I feel is if you can tap into the decision making, which is really on the front office
decision
side,
making
on how
sorry,
can you
I think you're
assist.
about to define it, but decision making on should we invest or not invest, or what kind of decision making?
It could be any other things, right? And on research, whether you're thinking this particular research investment is a good idea or not, whether you should invest or not, who are the right areas of investors to focus on for raising capital, anything that a firm is really going through, and you can assist in the decision making part. I think the use cases are a lot more valuable for the firm. And I eventually think at some point later, if I cross that same leap, is eventually human augmentation, right? Which probably is further along, but the best part now is the more and more cases that we can think on the decision making part. There's probably a lot more advantage. The chatbots are fun. They're always great. You can always give those as your means to communicate or interact, but at the same point, I think people are not going to find a way to integrate themselves into the ecosystem. Something for fun is always great, but I think if something becomes a necessity, it creates a lot more value. So, by the way, I heard one thing. The first chatbot was actually after your name. It's called Elijah. That was built in 1996.
That's
You should look it
awesome.
up.
So the very first chatbot was called Elijah. This is
Elijah. Yeah.
this is interesting. Maybe that'll be like my lead-in
Yeah.
in the future
So
for my show. The Elijah, the original chatbot.
I think you should. Yeah.
I like what you said though, because I think front office, if you're able to impact a money decision, and you were just talking about decisions in general, but if you're able to impact a money decision, it's even more ROI.
Yes.
Back office, it takes someone 4 hours. Now we can do it in one. That's great. Let me calculate the hourly rate. Okay, that makes sense. It does it. Well, what's my believability on how much effort it's going to take to get this set up? And will it really save those 3 hours? Or is it going to be more like 2.5? And, right. So there is an ROI decision there, and you can make it, and it's fine. But if you can say, hey, you're going to raise more funds because of this, and it's going to help you bring in LPs, or you're going to deploy capital more smartly and get better returns, those types of decisions are higher impact.
Yeah.
But where's the gap? If that's the highest impact, and that's kind of what you're thinking and believing, why is that not top and front and center? It's been more kind of on this back office automation stuff historically. Where's the gap, right? Why aren't more people focused on front of office decision making?
Yeah. That's because I think it's just for the sheer fact that those use cases are harder to crack, as opposed to the other ones are. I see the problem. It's very tangible. I see the report coming from A, and the report and the data getting extracted to B.
There's nothing novel. You're just taking it,
right?
doing it more efficiently.
However,
it's not actually generating something new of an insight.
Yeah. So, and it's also easy to sell the idea of that automation, as opposed to the other way. Now, like I'll give you an example. If there are firms that are now working on information to identify and match thesis. If you have an investment thesis and you want to validate whether your information and idea is great or not, there are firms that are now basically using generative AI models, trying to come up with a mechanism to identify whether
Is that
your
like
thesis is great or
backtesting a
not.
thesis in
If you look at,
PE or something?
it's not backtesting, it's more of a qualitative validation. Let's say, if you have a thesis saying that I feel like within the impact of tariffs within this particular industry is XYZ, and these are the firms that could take advantage, as an
Gotcha.
example. With the advent of AI and the additional compute power, there's enormous effect on data centers. This is the downstream impact of it, and these are the firms that could take advantage
So
of
this is more
that
like a
particular
hedge
growth.
fund relevant type
And if you have a
thing
case,
of
same thing applies for private as well, because if you could have a thesis on
okay,
private
more long
companies,
term
right?
kind of private
And
strategy. Yeah, yeah.
so and if you take that as a clear case, and for an analyst to pitch that idea to the CIO and really understand and showcase, like, hey, what additional validation or information that's required so that to see whether your thesis are good or not. What does the industry actually think of your thesis compared to what you have versus some of the top analysts that are out there talking about that particular space? That matching of information has become so much easier and faster now. An analyst can pitch that idea much faster, and a CIO, someone who's making a decision on that, can also be making that decision faster. If I look at that as a simple use case that is very, very quickly developable and implementable in a situation that can be taken advantage, is great opportunity. But what's the unique factor in that is what's the information that you should be looking for to match the identity, match the thesis itself. What's the information from a both quantitative standpoint? If you have a combination of a few firms within that company, within that fund, if you have to really look at what kind of information can I extract for those individual firms so that I can aggregate the synthesis to present it to a CIO to showcase, hey, this idea is a combination of these 4 or 5 funds. Here's the view of individually what those funds are, and here's the view of what that aggregate looks like. Some of those things on the front office side are very, they might feel very unique and niche for that particular firm on how they make a decision. But to be honest, I think it's coming up with an idea of automating those is actually very doable in a much easier sense.
No,
So,
keep going.
go ahead.
I was going to ask kind of a question of where does all this go, but keep going. This is fascinating.
Yeah, the other component what I'm also thinking of is like the within the private industry is almost more about capital raising is a big component. Where do you identify what are the best sources of areas or investors that a firm should be targeting to focus on raising their money, right? That usually goes in a long way of information that they go through, spending time on public media, and social media, and trying to understand like where's the interest in with space. For example, we know that Middle East is spending a lot of money on private investment funds now. Saudi fund or as well as the some of the
Qatar
UAE
as well.
firms that
QIA.
are multi. Yeah, so like all of those are multi large assets, right? So in terms of a firm that's actually looking to raise money to understand where they should be focusing their energy on, there's a lot of information that an AI can assist really funneling using their CRM information plus what's available in the market, and really creating a synthesis of like these are the high level targeted investors that the firm should focus on. I think if that process can be reiterated and improved, which is very possible with using Gen AI because it improves over time with the data that you're feeding it. It creates a very nice set of efficiency gain for a team that's trying to a capital formation team or capital financing team, all of those guys to really understand how to target your audience better, so that you're not wasting a lot of time to identify where you can raise money on, right? So in every component within that front office or even middle office, I mean, I have a few use cases on the middle office side for due diligence, right? Right now, it's much easier to do due diligence on public
Hmm.
companies as opposed to private companies. You can, if you can run a quick sentiment analysis on Reddit, as an example, that's a clear case of understanding, like, hey, what is the market thinking of this particular firm, right? Or you can actually think of how to really create an added advantage using the information that your firm has, because a lot of people have years and years of unstructured research information. Nobody thinks of using them unless, occasionally
Oh, right.
someone
So
going through
all
and
my
reading it.
historical notes on how we did due diligence, how we evaluate a
Yeah,
company, the performance of it over, this could be 2010 to 2015, like, and
it's
we sold the company. So no one ever looks at that
yeah.
ever again unless we need to go hunt out a number.
And if you look at like these companies that have not only their own information, but they have portfolio
Mm.
companies that have information that they keep, the just the capacity with which you can churn that information and really give that as an added advantage for your front office team is tremendous, I think. So those are, untapped use cases. I think if a technology mind can really create those opportunities for seeing through the light and creating the quick POC of showing how a decision could be made faster, or or much more informed. It all of that is really, I to be honest, I wouldn't care too much about like what's the ROI on that. And I think all the CIOs would be getting excited if seeing use cases like that getting implemented in any sort of PE firm or
Yeah, no,
even a hedge
that's
funds for that
fascinating.
case.
And it actually brings up, so there's a company I worked with in 2017, maybe 2018, called Funding Gates. And they had a unique, they were trying to find product market fit. But it kind of touches on what you were talking about of there's insights in not just your historical analyses and your historical data, but also your portfolio company's data. And so what Funding Gates did was it helped you capture accounts receivable. So you connect it with QuickBooks, and it figures out which of your vendors haven't paid you, right, or which of your clients haven't paid you, and they're 30 days late, 60 days late, 90 days late, send them to collection, right? It kind of helped you with all of that. And it was a paid platform. Funding Gates was a paid platform. But what we started discovering and finding out is because we were connecting to QuickBooks for all 300 of our customers or something, they had 60 vendors that were paying them, or 100 vendors that were paying them. And we started to be able to see this and correlate it across different, if client one, client two, client three all use some type of shipping company, and we consistently see that they're not making payments on time, or we consistently see that they are making payments on time, well, now we can reach out to that vendor and say, hey, do you want a type of loan? We see what your cash flows are because we see the downstream effects of you paying our customers. And so it's kind of this customers clients data, right? And in the PE example, it's your portfolio company's data, right? It's the PE firm's portfolio company's data on their customers, clients, companies, et cetera, that you kind of have it almost as an artifact of what you do in your primary business. But there's so much insights that you can actually generate from that. And they ended up spinning up a separate product that did direct outreach for different types of loans based on the credit worthiness. And unlike traditional private credit and private lending, which is just based off of like connect your QuickBooks and then we just look at cash flow analysis and then we lend based on that, there was this additional level of credit worthiness that we could understand because we've seen the past 24, 48 months of your payment history to your primary vendors across multiple different facets. And so you can offer different interest rate products. So anyway, that was a whole separate company, but it just goes to show the power of, if you look at the artifacts that are generated from your primary business, and then you can use and do something with that data, there's a lot of novel insights that you can generate that could be useful in whether it's for PE deal flow analysis, deal sourcing, underwriting
Yeah.
in a unique way. There's a lot that you could probably do with that.
Yeah, I mean, I agree. I mean, think, and you, if you can add unstructured information historically that you've been keeping to that, which is now accessible and available for insights, I think it's enormous power, right? A similar an example is a lot of the RIAs or advisory firms and private banks. They keep a high level record of all interactions that they
And
have
this is on
with
the
high
private
net
wealth
worth
side. Yeah.
individuals. Either it's Yeah, and even in private equity now, right? I think a lot of them are having portfolio advice as an additional service that they can offer to the investors. And if you look at wealth management part of it there, every interaction that they have with a high net worth individual, they do keep track of it. It's either in a notes that's sitting in a CRM or sometimes recorded because it's sitting in an audio. All of this is unstructured information. And imagine if you now are talking to a person that's not only within that particular space or private equity or particular family office. If let's say that person is based in the same region as this other gentleman that you have record of, if this person is in the same industry that's let's say in the crypto industry that made a lot of money, the insights that you're drawing off from a conversation A that you could really mask and take advantage to understand, like, hey, how is this ready? And I got a great insight when I was talking to this other crypto person, or I got a great insight when I was talking to this person from South Africa. Similarly, when you're now having another meeting with a high net worth individual in South Africa, you could greatly take advantage of
Real
using that
time as you're
information.
having that
So,
conversation. It could be monitoring your conversation, bubbling up useful insights and feeding them to you.
so there's I think each of these spaces are very exciting from generative AI standpoint, as well as you know I think traditionally what I feel, if I was approaching a technology strategy, it used to be a lot more of, let me show you your ecosystem. What's your best data strategy? What are some of the best fintechs that we could take advantage? But now I think it's more of, let's really create a competitive advantage of making sure technology is in the forefront for you. I think what is, in essence, what I've been learning, talking to companies like yours and a few others, there's the time with which some of these are moving is so fast. There's obviously room for making sure that the right applicabilities is done for firms, but at the same point, I think taking advantage of some of these great use cases, it almost now, I feel technology is going to be seen in a much different lens. A lot of times, most of these industries, especially the three that we were talking about, technology is almost like a supporting cast. But I think there's a much more chance to kind of be on the forefront now, to be getting involved in the decision making, getting involved in creating opportunities, processing more deals, everything that we just spoke about. So I think that itself is exciting, right? I think to the fact that you're not only assisting till now and created a strong platform or a base, but now you're actually supporting some of the key decisions that are required to
Ajay,
make.
this has been a phenomenal conversation. If people want to talk with you, connect with you, work with you, where should they go and how should they connect?
Yeah, my LinkedIn is probably the best way. I'm really a old, boring person that's not on any other social media. So, Ajay Srivatsavai, I think you'll be finding me on LinkedIn. Pleasure is mine. Again, you've been a great thought partner with respect to what you guys are building. Plus, at the same point, I'm really excited for you guys to see how you grow. But wonderful chatting and
Thanks,
pleasure is
Ajay.
mine. Take care.
Awesome. If you enjoyed that episode, make sure you check out this video right here. And if you really enjoyed it and you listened to the end, take 2 seconds and share the love so someone else might find it by clicking the thumbs up button and subscribing. I appreciate you, and I hope you have a wonderful day. But click that button.